Good morning, you guys. This is the DeFi Crypto Alliance show where we're doing our best to be the bridge between real estate investors, entrepreneurs, and the crypto community, specifically Pulse Chain, Pulsex, and all of the beautiful things that we have to play with over there. We've got a cool show today to outline some math that I think is important that many do not understand, and it's obvious to see on Twitter. And so we're here to be a resource to you guys. Corey, go ahead and take it away.
Absolutely, Corey Geary here, and I'm just truly blessed to be on this amazing journey with all of you guys, where we're going to be using crypto as a wealth creation tool and using real estate as a wealth preservation tool, and basically change the trajectory of not only your life but your family lives, and we're able to join in forces with our real estate community and entrepreneurial buddies and bring them along for this journey. And it's just been an absolute blast. Guys, we are on a big dip today. I don't know if you guys have looked at the charts. I mean, somebody was dumping $1.2 million worth of Pulse. Hex has been dipping. Pulsex has been dipping. Pulsex went back under the sacrifice price. If you guys are not DCAing into this, I don't know what you're doing. Now, it's not financial advice. But for me, I've been DCAing on this nice little dip that we're having. And yeah, it's a good time to accumulate because, I mean, you got to ask yourself, how long are we going to stay in these zones before, we take off and we never come back? You know how crypto is. Once it kind of leaves a certain area and goes off to the next area, it really doesn't come back. And so, yeah. You got to ask yourself that question. And man, I've been loving this juicy dip. But Dane's been having a lot of fun with the yield farming, so this is gonna be a good show today.
Yeah. I've been playing around trying to figure it out. So many people. All right. Is it yield farming bad? I always thought RH said not to do so as it is risk and you might lose some of your coins. No, agreed. Yeah, I mean, so keep in mind, I think that Richard speaks oftentimes. Well, so what's the best way to say this? There are things that I'll give you an example. So with real estate, there are things that Corey and I did a lot of that I would not recommend your average user do because your average user would go and lose their money. Crypto's the same. I think Richard gives common ways of like being wise, how to approach crypto for the average user. The average user should probably just go buy their tokens and sit on their hands for a couple of years and do that. And so if you're more sophisticated, there's lots of games to play and you absolutely can lose, you can win. It depends on you and how you want to approach this, what you want your portfolio to do and be, and you can go ahead and do whatever you want there. So we have been testing. I like to, or I should say, I have been mostly testing some stuff in the farms. Corey's been doing a little bit of testing too, just to be able to see how it plays out. And we're testing with small amounts of our bags, really small amounts, and so our risk is managed in that respect. So like any show that we do, you got to do your own due diligence to figure out how you want to build your own portfolio. We don't give any financial advice here. We just talk about what we're doing with our portfolio to try to provide entertainment, information, and you guys do what you will with the information. So great question. I've got a number of you guys on. What's up, Kaiza? What's up, Francis? What's up, Bye Guy? Albert's here. Alberto's in our group. What's up, Alberto? Crypto Compassion. Yeah, what's up, guys? We got lots of you here. Simon, Urban Productions. Good to have you guys on. So I thought it'd be really helpful today to be able to show you guys how you can go and map out your portfolio if you're doing any farming, how you can map it out to be able to track what your actual gains are. A lot of people just put in a farm and they look at their rewards. They don't know how to calculate impermanent loss, and they think that they're up a bunch when they may not actually be up as much as they had anticipated. So let me go ahead and I'll share my screen with you guys and show you the spreadsheet that I built out. And you could build out something similar for yourself. So this is these are some of the results from some of the people in our mastermind as well. which has been cool to see. So I've taken results from a few different places and compiled them here to be able to show you guys how to build something like this out to determine where you're at. So the first thing is that when you go in, and I'll show you. Let me go over here really quick. Okay. So when you come here to Pulsex and you're going to put up a pair into the liquidity pools and then ideally put them into the farms, you come here to trade and then we come to liquidity. We're going to add liquidity. And it's cool because it shows you here if we wanted to do Pulse and Pulsex, we wanted to pair this together, we could put in, however much we had, maybe had like $2,000. It would show us how much Pulsex we would need to pair with this Pulse to be able to go and put up our LP. So you can use this as a reference point to know what to swap into in order to create your pairs and do things of that nature. I also recommend notating when you go and you put up a pair here in this first little bit to notate how many tokens you have on each side, because this is going to change once you put up your liquidity in your pair. And I'll show you here. So that's what I've done. So I've got my starting tokens. This is an EHEX PHEX pair, an INK PLS pair, and an INK PLSX pair. And this is how many tokens we started with. Tokens A are the first ones listed here, EHEX, INK, and INK. And tokens B are PHEX, Pulse, and Pulsex. So I've indicated how many tokens were there at the start of the farm. I've indicated the beginning balances. Once again, these are rough. I did estimations, so not to dox anybody. And then what you need to do is you need to highlight. For me, I changed these areas to green that I need to update, and I haven't updated these since last night. Some of this pricing is off. But you can see here our token amounts have changed. From in this EHEX PHEX pair, my EHEX tokens used to be 76,970. They're now 89,295, and my PHEX is down as far as the amount of tokens. And the way that these liquidity pools work is you're always selling the more valuable token for the less valuable one. So here in the EHEX PHEX, the EHEX became more valuable, or I should say the PHEX became more valuable since I was providing liquidity in this pair. And so the system automatically sells my PHEX for more EHEX in this ratio. And you've got to determine if you're making enough yield to offset what is your impermanent loss. And so I've built out the math here. I simply took the token amounts and I said, hey, if I just held the two tokens, my EHEX and PHEX, for instance, or any of these pairs, if I just held my two tokens and I did not provide liquidity, what would the value of them be? And once again, this was last night. So we're on a dip today. I haven't done it with the dip numbers. This is just since last night, but it gives you an idea of how to work these numbers. So I took the value of these tokens, A and B, and I said, hey, I just multiplied those and added them together, and it gives me a value of $4,000. So you can see this dipped a little bit. There's a little bit of dip in price from when I started to when I calculated this.
Which would have happened if you were holding the tokens anyways.
Yeah, exactly. So if you're holding the tokens anyways, there's a little bit of a dip, not a big deal. And I did that for each of these. Now these ones appreciated, which was cool. So the INK Pulse, it went from about $1,000 to almost 2,000, and from 3,300, 3,400 to about $7,700. However, you'll notice that since I was providing LP, not including my rewards yet, well, I'm actually down on these positions in comparison to just holding the tokens. So you can see, I've lost a little bit. What is that? That's like $30. I'm down $30 on this one. This one I'm down, a little bit over 1,000, and this one is a couple $1,000. So this is where your impermanent loss kicks in, and this is what a lot of people don't understand or know how to factor in. I've lost money theoretically over the last 4 or 5 days that I've been providing this because of how the LP pools work and how you're selling your more valuable asset for your less valuable one all of the time, and those ratios bounce back and forth. However, we need to go, and this is the factor, one of the factors that everybody's here for, and everybody's yield farming, or it feels like everybody is. So we need to factor in our rewards to be able to see if we've offset this impermanent loss. And you can see here in these pools, essentially, this is what's been earned over the last few days. You know, you have 11, 3, and 5 incentive token. This is the values of those incentive tokens. And so down here, I've simply taken my pairs. I've said, hey, once again, this is the same column if there was no LP. And then I included the LP values plus the rewards to be able to see what the profits or losses may be. And at least in the last 4 or 5 days, you can see I'm up. And as a blended rate, I'm up about 6% over 4 or 5 days, which is pretty remarkable.
Mm-hmm.
So that's how it works. That's how you can use the same formula to be able to determine your own values and be able to track them and truly see if you're actually earning anything. Now, since this is just over a very short period of time, there hasn't been, in my opinion, enough time for tokens A and B to move from each other for there to be a large divergence to experience really severe impermanent loss. And so it'll be interesting to see what these are over a longer period of time. That being said, I felt like where the market was at last night, that I wanted to pull my LP, and it looks like it was a great decision. I used my incentive tokens to be able to build my Pulse and Pulsex bags. I'm pretty happy with where I stand right there. So I will not be tracking these long term because I went ahead and pulled it. And so you can decide what you want to do with yours over a longer time horizon. But I'd heavily recommend, once again, we don't give financial advice. We can say for our portfolios doing this, you know, we want to do this with a relatively small portion of our portfolio so that if impermanent loss really kicks in strong, we're not getting kicked in the nuts.
Yep, I agree with that 100%. You know, I'm probably doing it roughly with about 2% of my portfolio. It's a very low amount. And my favorite pairs are going to be Pulse and Pulsex because they should relatively rock and roll together with each other between that 2 to 4 range. You know, probably for a while. I mean, obviously Pulsex you can see Pulsex maybe rip away from Pulse once the single side staking comes, because that's going to add some more bullish momentum, in my opinion, to Pulsex. The other pair that I like is PHEX and Pulse. So I feel like those two will also rock and roll together pretty well. You know, we've seen that one hex gets us anywhere from 90 pulse all the way up to 150 pulse, and it seems to stay in that range pretty well depending on what the market's doing, and we're anticipating it to stay in that range with the heavy liquidity bonding between Pulse, Pulsex, and PHEX. Everything else, in my opinion, is complete gambling. Now you could do, you know, you could have different opinions on, you know, EHEX, the PHEX. You could have different opinions on your incentive token, the Pulse. But I just feel like this is just completely me, in my opinion. Everything beyond those two pairs are kind of really, you're going to just have to watch to see what the market's going to hand you. And even with those two pairs, there's still risk of it really working against you. So we'll just have to see.
Yeah, absolutely. And let me show you too. So Mike, and once again, I think this is wrong, Mike, and let me explain why. So a lot of people, if you go and you look at the farms, all right. So if we go back here and we look at these farms, you'll notice that some of the APRs are extremely high, particularly in the stable coin pairs. Oh, and they're down. That's interesting. They're down from yesterday because they've been holding pretty steady, really close to 1,000%. So if you look at like DAI with Pulse or USDC with Pulse, or you've got USDT with Pulse, These are some of the juiciest APRs. They're, they're about 900-ish% right now, and they've been dropping. And as more liquidity floods in, they tend to go down. And the problem with this is that, let me pull this over here. I have the chart right here. All right, cool. So the problem with this is if we look at the Pulse chart, certainly we're seeing a dip more recently. But if you would have gone in and provided liquidity, say right in here, well, you're bonding liquidity between a stable coin that is stable, it's not going up or down, there's no volatility, with something that is extremely volatile. And so you could see as Pulse chain went up this whole time, well, you were selling your Pulse for your stable coin. You're dumping it, essentially the algorithm was dumping it for more stables. And even though you were earning fees, you theoretically are, I mean, even at 1,000% APR, or let's just take like today's, we'll take the juiciest one, 908. Let's just say you did like $1,000. If we look at it over 30 days, I mean, you've got to be here in order to earn $1,000 worth of incentive token if this holds for 30 days. And once again, we've been seeing all of the APRs dropping in all of these pairs, and we haven't been live for 2 weeks. So I'd be willing to bet that these APRs continue to go down, and you would most likely be better off, in some of these other pairs that earn less, but have far less impermanent loss risk, kind of like the pairs that Corey mentioned earlier. So even in some of these like Ink and Pulsex, if you were in some of these pairs, you're getting almost half the APR, but you know you're not going to get destroyed in a permanent loss like you will pairing to a stable coin. Now so there's up to you what you participate in, but
I guess there is a caveat to that. If you're a large whale and you're looking to exit the system without destroying the chart against yourself, that's a good way to, like, if you're like, Pulse is going to go up and you would like to accumulate, if your intention is to accumulate more stable coin because you're exiting, that's where that makes sense. Like if you're like, hey, screw Richard Hart, I'm going to go over here and play in Zen, and I'm going to exit out all my Pulse that I sacrificed 2 years ago, then it could make sense if that's what your intention is. In fact, it makes better sense than you dumping it on market and wrecking the price chart, right? You're not slipping against yourself. So that's where it kind of makes sense, and vice versa. If you're really good at TA, like Access Alive is, and some of these other guys, like we're in store for a correction, and we're going to start going the other way, right? We're going to dip like today's dip. If you could have anticipated today's dip and set that stable coin LP pair at the top of the price chart, now this is like literally like trader mindset now, so you got to be really careful. But that's what you're wanting to accumulate Pulse. You could have set that LP up at the top of the price chart, and you would have accumulated Pulse on this way down, and you would have done the opposite. You would have been DCAing into Pulse as you're also collecting fees and then collecting setup token. But you got to be careful with both of those strategies. You have to know, or at least anticipate, you're never going to really know, where the price is going, and also be ready to pull the liquidity when you're happy with your position, when your anticipation has been met, right? And when you think you've kind of met your goals, or that the price is going to move against you again, or whatever it may be. So that's my thoughts on that. Otherwise, you're 100% right, Dane. The LP positions on stable coins are absolutely destructive.
Yes. And keep in mind too, I mean, if Pulse Chain, let's say there's a scenario where it just rips, and it could, it could go pretty bananas here. If it just rips and it goes and does, I don't know, call it a 5x or 10x, kind of like it has from the bottom, it's done, it's done a pretty strong move. In fact, I could tell you. So it's gone from a low of like 3 zeros and a, oh, that's Pulsex. Hold on. All right. So Pulse has gone from a low of, let's see.
I feel like it's 4 zeros and a 2 or something, or 4 zeros and a
Yeah, I think
3.
you're right. I mean,
Somewhere
it would
around there.
clear down to 4 zeros and a 3. Yeah, let's just call it
Yeah,
4 zeros and a 3. I mean,
makes
so
sense.
what is that? We've done 3, 6, 9, 12. I mean, up to the top, that was almost a 10x
What's the top
to
ding then? It's like a 2
it's
7
almost
or
3 zeros and a 3, 3 zeros and a
oh,
2 8.
okay, okay. That's a nice little
Yeah.
correction we had today.
Yeah,
It's been
it
nice.
is. So, I mean, you almost did a 10x from the very bottom. So if it goes and does something similar, I mean, you could get left behind very quickly being paired to stable coins. I mean, and if you're in any of the wrong pairs, it is absolutely a game that is one that can be treacherous, and so you want to be careful out there about how you play it.
And it only takes one whale to do it. I mean, for you guys who were around and we weren't around, but I know some of you guys were when Godwell came in and when he was initially started buying into Hex, like that price chart, man, was strictly up to the right. Like everyone who wasn't into Hex at that time in that point in time got left behind for that pricing, and it never returned back to that pricing. And so
Right.
you could see another event like that, obviously in Pulse Chain, especially as the word gets out more and more, especially as we get closer to the Bitcoin halving. There's so many different things, right, coming to life in our ecosystem that's going to get more and more eyes on us. And it takes one whale like that. And it could be Godwell. It could be Godwell. It could be like, or it could be another whale who comes in our ecosystem and wants to participate in the fun. And so, yeah, careful.
Yep, be careful. And the APRs are going down very fast. It'll be interesting once. I mean, we are assuming that Richard wants to fork version 3 of Uniswap at some point and implement that. And so you've also got to factor that in. If and when Richard does that, there's liquidity in mass is going to flow there. And where does that leave you if you're on V2? If you're underwater, well, it probably doesn't leave you in a real optimal position.
No.
So lots of things to consider in the farms. Yeah, feel free to go back and check out how to calculate your impermanent loss that we covered earlier in the video if you're just tuning in now, to be able to determine, how you're doing over time. But so far, I'm up a little bit. I felt like the market was, like I said, like the market was kind of topping out, and so I exited my positions and put everything back into Pulse and Pulsex, and I feel pretty comfortable with that.
Yeah, I like the move, man. And you guys, there's nothing wrong with it. Like I said, a very, very small position in your bag. Kind of scratch the itch. We all need to scratch the degen itch anyways. We all have it in us. And do it a very, very small position in your bag and get a feel for it. Because it does do one thing, and I will say this. It adds a value and a service to the ecosystem. We're in DeFi. We don't have a centralized exchanges providing the liquidity for us. There's no order books, right? We have a DEX, a decentralized exchange, where it's peer-to-peer. And so by you providing this liquidity, you're actually providing a service and a value to the ecosystem. I mean, like I said, we all need to provide only a little tiny bit, and some of us don't have to provide it all if you don't want to. But I mean, it don't take much for the ecosystem to work, and a few good whales, a few good market makers too, right? And so it does provide a service the same way a node validator provides a service to the ecosystem, which we'll be doing. But with a node validator, you don't have the risk that you have, I feel like, with liquidity providing. Your only risk is if you get slashed because you weren't doing the correct, you weren't being a good actor in the ecosystem, right? And so that's where you can have a problem in node validators. So,
Right, that's a great point. This is a good question. Why are there not more tokens in Pulsex for swapping? I'm only seeing like 10 options. I thought all the Pulse Chain ecosystem tokens would be available at a minimum. Yeah, so you can go ahead and swap between, anything you want. You can go and provide liquidity in any pair that you want. But as far as what Richard and his team want to incentivize, that's what's available in the farms. So I think that there's a lot of people that don't understand, and not to say that this may not be you homophobic, but I see a lot of people on Twitter where they just don't get it. You can provide liquidity between any pairs and
Yeah.
earn fees in those two tokens that you're putting up in a pool. But as far as getting the incentive token and bonused on top of that, it has to be a pair that's part of the farms. And that's where you've got to decide how you got to decide how you want to play the game.
Yeah, you can go put your E Pepe and put it up with P Pepe and see how it does. I mean, I would never do that, but you could do that. You just can't put it in the farm, and you'll earn fees as people are swapping in and out of them. But that's about it. So
Yeah. Oh, this is a good one, Corey. Why don't you address this one? Don't share any specific names, but I think this is an interesting talking point.
uh, uh, so it's just because of the uncertainty of the two ecosystems right now. We don't know the future of EHEX with PHEX. You know, obviously there's a lot of big brains who are saying that we should get price parity and we should rock and roll price parity off to the sunset and we all get rich on both chains. But what if it doesn't? What if all the money starts flowing out slowly and it just bleeds everything out from Ethereum over to Pulse Chain? What if that happens? Well, then any liquidity providing that you're doing with EHEX and PHEX, you're going to suffer a pretty extreme and permanent loss where you're going to be stuck holding the token with least value. In this case, would be EHEX. And so I'm not saying that's what's going to happen, but that's the risk you're going to take if you're going to make the EHEX PHEX pair, is that you're going to say for certain with your bag that this is going to be parity and right off of the sunset. And as we're seeing right now, they're not parity. And we're seeing EHEX kind of, take a bit of a hit over PHEX. And I was hanging out with a few whales last night, and they were in full certainty with their beliefs that EHEX is not going to make it long term. And that PX is more the chain where all the money might navigate to. Or maybe EHEX is a 1/10 of what PHEX is, once we go into the bull run. Now, that these are these whales' opinions. It don't matter. It's just opinions regardless, because there are other smart people in the ecosystem who believe that we will have parity. And there are even some people who think EHEX will do better. That EHEX is kind of like the Ferrari, if you will, of the two hexes. The problem is we don't know, and the unknown makes me like, I'm gonna have both hexes. Don't get me wrong. I'm not like going over to Ethereum and nuking all my stakes. It's not what I'm doing. I like EHEX just fine. I created my stakes over there for a reason, but I'm not going to create any new economic energy tying them together when I don't know, especially this early in the game. Now, maybe like 6 months down the road, as we see what's kind of happening, as we're kind of getting closer to the bull market and we see how the two ecosystems work together, then maybe I can get some more confidence opening up an EHEX and PHEX LP pair. But I'd rather do it with like PHEX and Pulse. Come on, that's going to rock and roll together. Pulsex and Pulse. That's going to rock and roll together for sure. That's in the same ecosystem. That's going to do well as far as like ratios are concerned. Because that's what.
Oh, but even like Pulse and Hex, they're two different cycles. Hex is a second cycle coin. Pulse is a first cycle coin. I mean, there's risk there.
Sure.
It's hard to determine. And like Corey said, there's a lot of people, and it's interesting, like very big bag holders that feel really strongly that Hex on Ethereum is going to do great, and others that think it's going to not do so great. And that's where, frankly, it's unknowable. We're talking about unknowable things, and you got to determine how much you want to hedge yourself in a certain direction, and then play your cards that way.
Yeah,
Corey and I don't know, and so
I think, or I hope, I don't think, because I have no clue. And that's part of crypto, guys. Remember, you always got to let down your ego and admit to yourself that you just don't know. And that's why we DCA. That's why we diversify. It's because we don't know. And So I mean, my bags are packed over on the Ethereum side. I hope EHEX sells off to the sunset, tied together with PHEX. That would be freaking beautiful. But it's still very unknowable.
Yeah, absolutely. This is yeah. Let me show you FOMOphobic. All right. So if we are here on the farms,
Yeah, because you could create the liquidity pool on any two tokens that you want. You're right. You're just not going to see
yeah,
them in the farm.
right, exactly. So if I want, I can come over here over trade. I can go to liquidity. I can add liquidity, and I can choose whatever I want. I can import tokens. I could
Right.
make a like if I had Pepe, like Corey was saying, like I could bridge over my Pepe and do a Pepe pair. I could provide liquidity between anything that I wanted here.
Yeah.
Like even if I went to let's say like here we are. I come over here. If I had a bunch of Pepe and I wanted to make a pool, I could come and grab the contract address from here. I can copy that. I can come over here. Let's see if I can import the token. There
Should
it
be able
is.
to.
So I
Yeah.
can import. I can import Pepe. I don't have any, but I could pair Pepe with Pulsex, or I could pair it with Pulse, or I could do whatever I wanted. So I can make
That's
a
a
pair
crazy
between
pair.
any of this, and then go through the steps of adding it. But that's different than being part of the farms. The farms are what Richard and his team control, and they choose what they want to incentivize. And so you can come in here and see what's available and then choose where you may or may not want to participate. I think one of the biggest mistakes that a lot of people make is they come in here and they just say, hey, what's the best APR? And then they think that's the best option. That's not necessarily the case. You've got to figure out your time frames you want to provide liquidity, what you think the future may hold, what percentage of your bags you may want to put up, and then make determinations from there. I mean, I can't tell you how many posts I've seen on Twitter where when like where was it? Some of these pairs were just absurd. It was like, I don't know, maybe it was one of these ink pairs, and they'd come in here and click on this calculator and they'd say, oh, let's do it for 30 days. And I put in $1,000. Look at that. And in the next month, you could earn $565 if you put up 1,000. But it's just not the case because the APRs are all being pushed down. They're getting lower and lower and lower over time. And so you've got to, I would say if you wanted to participate, probably bet just a really small amount and see how it goes for a week or so. Give it a week, see how it goes, calculate your impermanent loss, see where that left you, and then you can make some determinations from there. But I'd also caution how many people I saw lots of them in the bull run. They thought they were excellent traders because it's easy to look good when everything's going up, and so they thought they were great traders.
This
And
is
then the
true.
market switched,
Jeez.
and they weren't great traders. The market was just carrying them, and so be cautious here. Even if you hit one that does great during a month, like that doesn't make you a genius. Be careful about how much you want to bet at any given time.
Yeah, and, we're going to see, and this is advantageous for us in our ecosystem, but we're going to see a lot of retail, yield farm chasers come in and play all these games. Let them come in and do it, because a lot of these guys will bounce around from like Phantom. Phantom has the same kind of like crazy APYs that you could do with their liquidity providing, and they bounce around and find the highest yields. Binance too is another one that you can go into, and there's a lot of aggressive yield farms you can put your money into. And some of these guys, what they do, that they yield farm chase, and they'll get into an asset while it's still in the thousands of percents, and then as the asset kind of drops down, they remove the liquidity, and then they're on to the next one. And so it's like it'd be really interesting to see, Dane, like one of these guys to sit down at the end of the year with like your spreadsheet after they've been playing the game for like a whole entire year, bouncing around all these different farms and chasing where their real profit margins were, and they might be profitable, but like versus like if they would have just held good quality assets.
Right, right. And that's where things like, gosh, I'm so excited. Freaking Richard keeps tweeting about how's your guys' day going? I'm like, Richard, give us the single-sided staking. We're ready for it.
Yeah.
And
you
so
want to make
we
our day
haven't seen
good,
that.
right?
Right. We haven't seen that yet. But Richard will give us the single-sided pools at some point. And it's pretty cool. If you go over to something like Pancake Swap, you can look at the syrup pools, which are, they're not going to be the same, but they're pretty similar. Yeah, let me grab these.
Yeah, I remember the bull market. I looked in there because that's when I first got into crypto, and there was APYs that were paying out over 100%.
Yeah, they were strong in the bear.
Yeah,
Like a lot of many of these pools are over 50%.
yeah. Well, I mean, the protocol providers, the guys who are supplying the tokens, they want to make sure they're being aggressive, especially in a bull market. It's a different mindset.
Yeah. All right. Cool. So you can see if you come over here to Pancake Swap, these are kind of similar. It's not the same, but kind of similar. You can see, there we go. You can see that if you come over here and you have the cake token, well, you can single side stake, which means you're not putting your cake up with another token and pairing anything. There's no impermanent loss risk here. You can go and put up your cake and earn these APRs in the form of these other tokens. And you can see they have time frames for which they'll be available. This feature, at least according to the testnets, appears like it will be there in Pulsex as well. One thing that's interesting, and I haven't dug into these really deep, so if you guys know differently, feel free to post in the comments, but I have not seen any of these pools that had a limit for how much cake you could stake in them. And I know there's concern with some of the people on Twitter with the why am I blanking? With the testnet, when you did have one of the pools that you could go and test on the single-sided staking, there was a minimum amount, or I should say a maximum amount of tokens, of Pulsex tokens you go put in that pool. That's not here on Pancake Swap, and you really could. I don't see why you needed to limit the amount of Pulsex that you could put into certain pools. You really could just throttle that and change it according to the time frames and the APRs that somebody may want to offer by putting up tokens that people could earn. So I'm curious to see if there will be limits, but by the sounds of it, some guys like K4K, it doesn't sound like there will be most likely.
Yep.
But lots of these, a lot of these pools are hanging out at 10%, 10% plus in the bear market. Like Corey said, a lot of this stuff is going to get juicy as we get closer, as we get into next year, Bitcoin halving. I think there's a really good chance that here we can start to see pools 20, 30, 40, 50 plus %, and certainly single-sided pools over on Pulsex as well.
Yep. And I'm going to have a compound strategy where, I'm taking a certain % of all my tokens, and then I'll be selling it for more Pulsex so I can compound into my Pulsex bag. I'll be taking a small portion of that of those monies received, and then I'll be putting it into Pulse, and then another small portion into stable coins for my buy the dip bag, if you will. So I'll have a strategy with all this, and I probably don't plan on holding any of the third-party tokens, although there is a strategy where you could hold 5 or 10% of the third-party tokens for a moon bag if you're wanting to play the moon bag game. But for me, I'd rather just keep putting that money back into the blue chip assets.
Sure. I like it. We'll talk more about that as those pools show up. When they do, they'll just be available in the pool section over on Pulsex. So that'll be fun. In other news, things are cranking, you guys. This is just like, we haven't been around in crypto for cycles and cycles and cycles like some of you guys may have. And if you have feedback, feel free to post in the comments. But some of the people that we've been talking about, Pulse Chain and Pulsex are nothing nothing other than remarkable as far as the launch. The volume is enormous. I posted on Facebook the other day. I was trying to provide perspective to some of our friends over there. Imagine, I mean, guys, just imagine if there was a new technology company that was launching and they were going to compete with Apple and Google and Microsoft. I mean, essentially, that would be like that new company launching and them taking the second spot in all of technology, overcoming Apple and Google, and having Microsoft being the only one that they hadn't overtaken yet as far as pulse chain volume is concerned, at least for a little bit until BSC started wash trading. So lots of just like, it's remarkable to be able to be here early. Be careful about what you do with your tokens. There's lots of people out there that want to take them from you. Katie does a great job of explaining what's going on. You can see Pulsex, number 3 DEX in the world in 24-hour volume, and we're only going to be growing. There's so many eyes on Pulse Chain and Pulsex. Richard hasn't even streamed yet. Like, it is wild.
It is wild. And I want to touch on that. There is a lot of different protocols, or not protocols, I would say, sharks coming for your money. You're going to see all the different meme coins with very low liquidity. You're going to see honeypots. You're going to see, I mean, we're going to see everything. And guys, I've even started to like reposition my portfolio where I'm going mainly into what I consider the blue chips, right? Pulse, Pulsex, and Hex. Those are my 3 blue chips, and I've been repositioning even some of my more speculative plays that I've been doing for the last, 6 months to a year. I'm starting to reposition that portfolio now. So I'm going to make sure I'm going to stay laser focused on the quality assets, not get as much shiny object syndrome. We all get it, and that's fine. And we can scratch that itch with a very small piece of our portfolio, but keep your eye on the prize, guys.
Yep, absolutely. And Katie also mentioned OKX, which is the top 5, or no, it listed. I think OKX is the 4th largest exchange in the world. If you're a United States resident, you cannot participate, which is unfortunate.
Yeah.
But it services a much larger portion of the world, which is cool. And Pulse Chain went live recently, and they even have it listed correctly at number 5.
Which is why we have this dip. Every
world.
time a new asset usually goes listed on an exchange, for some reason, I guess historically, there's a dip always after that. So, like,
Right.
I'm not sure why that is. It makes no sense to me in my head. But, like, okay, I'll take the dip. Like, it's so funny.
Right. If you guys can explain that in the comments, we'd love to get some more perspective there. I don't know why that is. I'd like to understand.
Yeah, maybe
it
someone
better.
like Sprack Burger, or I see Paul Sachs. There's some smarter people in the comments here who might have a better idea of what that is. Like, I guess the Shiba Inu, like when it topped, it was all when they listed it on an exchange. Like, it's always when they list it. I don't know what that is.
Yeah. Yeah, Tetra will be cool. I'm really hopeful they can pull everything off that they're after. If they can, man, it's going to be awesome to automate a lot of this stuff.
Yep. I have a small position with them, so.
Yeah. Apparently, we need to pick up some Gucci gear and whatnot, so we look the part here, Corey.
Oh, okay, yeah. Let me go out and buy Gucci here in Puerto Rico.
Right. How to optimize frequency of harvesting daily, weekly, monthly, twice a year. Man, that is a good question. And it really comes down to, because you can do so much with the ink token. It is the ink token for the first week has been the highest performer on all of Pulse Chain, Pulsex pretty much. It is absolutely ripped faces off. It's pulled back now. And so, are you selling that off to swap into stable, to hold longer term, to buy dips? Are you just swapping that immediately into other assets? Do you want to hold a portion of it longer term? There's a lot of things that can go into that. I just don't want a job. And so for me, I'm not like monitoring everything all the time and pulling out. I see people on Twitter, they're like, oh, I'm harvesting all the time and I'm doing all this stuff. I think that's great. And we're excited too. I I like my lifestyle, and my lifestyle means that I'm not staring at Pulsex all of the time. So you've got to determine what that looks like for you. Everybody's talking like there's no downside to single side staking for Pulsex, so just go all in. Yeah, so we'll talk. That's a great question. So we can talk about this more once the pools are open. So your risk is contract risk with the token, the third party token that you're earning. So there's not impermanent loss risk. There is contract risk though, and one of the beautiful things about the pools is Richard created essentially there's a DAO, a decentralized. Why am I blanking, Corey? What does that stand for?
Decentralized Anonymous Organization, DAO.
Thank you. Yes, thank you. Essentially, it's like a voting system, and the devs will have a large part in that as well, where these protocols can be vetted. So theoretically, there should be a reasonable amount of safety in what is available for us to be able to earn in the pools. And one thing that you could do that I've heard a few people talking about on Twitter, which I think there could be a lot of wisdom in this, is you could go ahead and stake your Pulsex and then pull out the reward and then move your Pulsex to another wallet before you swapped that token that you're earning from the pools, before you swapped it or did anything with it to be able to mitigate risk, contract risk there.
You have one wallet that's basically just going to be your like I guess third party degen staking wallet, like, and you just, or maybe two or three, and you're moving your Pulsex in between them as you're doing this strategy. Yeah, I like that.
Yeah, because you could harvest your rewards and accumulate into a wallet, and then when you were ready to get rid of those or dump them or whatever, then you'd you'd have to get your Pulsex out of the staking and put it. It'd be really nice if there was a function that you could harvest the rewards to another wallet. In fact, that'll be a nice Tetra use case. Well, but even then, if you're swapping, you're giving it. Yeah, I don't know. I'll have to think. Yeah. I have to think through that and see. Another thing that you could do is you could split up your Pulsex between multiple wallets, and your wallets are only farming certain tokens in those wallets, and so you're spreading out risk there. So that if you have one that you're farming that somehow sneaks through the pools and it's dangerous, and there's contract risk, and you get rugged in that wallet, we don't have all your Pulsex in one wallet. So that's an option too.
Yeah, it'd be nice if we had, like, say, for example, the Pulse Police, who was like auditing every single protocol coming into the system, right? That would be so cool, because those guys have done an amazing job up to this point of sniffing out the bad actors.
Yeah. Gonna wait for a couple of months for a single-sided stake. We are not ready. That'll be interesting. Yeah, I mean, I wouldn't be surprised if we saw it in the next few weeks, but certainly it could take longer. Yeah, it'll be interesting to see. When looking on Dex Screener, does the makers column indicate how many wallets are making the pair, providing liquidity, or does it indicate? I don't know this one. Do you know, Corey?
When looking on Dex Screener, does the makers column indicate how many wallets are making the pair? If provided, yeah, I don't know the answer to this question either. On Dex Screener, the makers. If anybody knows that in the comments, go ahead and comment the answer.
Yeah. Let's see. Went to mow. We were all poor plebs and trailer trash. Nothing to see here. Maybe need a VC chain.
Sure.
Yeah. I mean, I felt ink was a little toppy, so I went ahead and swapped it for more Pulse Chain and Pulsex. That's my priority. I want to gather and get more Pulse Chain and Pulsex. I've got my hex bags packed. I feel really comfortable with where they're at. I could buy more, but my personal interest is far greater in Pulse Chain and Pulsex, and so that's my opinion. And what I'm doing with my holdings, I'm stacking accordingly. How about you, Corey? You feel pretty similar,
it's about the same. I mean, I want to hold a small moon bag of it. On the side, I'll keep always a little bit in my wallet. But for the most part, it's for stacking the blue chips.
Right. This is interesting. To your point, there's a poopy pair Made 8 hours ago. It's an 120x, but please learn to read deck screener. You can see clearly that all the liquidity was generated in the first second. No, and I learned a little lesson the other day. I was chasing. I was like, you know what? I'll chase a couple of meme coins, and so I went in, and it's really interesting to look at the price chart and when they release the contract to the public. So they released the contract to the public 3 minutes after the launch, and for the
Shocking.
first 3 minutes, you see green candles, which are all the insiders buying it up. And then they released the public address for people to get in. And I was there like first minute. I was like, let's go. And it's just a really small bet. Let's play the game and see. I was bored and it's fun to play. So I played, and sure enough, man, like there was a small pump from when I got in. And they're freaking trading the crap out of it because they all got in early. And then like it hasn't done anything. And they're posting on Twitter, oh, look at the volume of this chart. I'm like, bro, but it doesn't go up. Like, good for you guys. You make money on the trading fees. I learned a valuable lesson, and it is what it is. Oh, man. Waiting for that 70% retracement, but the Pulsex pullbacks are beautiful. Absolutely. Absolutely. Man, and we've talked about it for months. I mean, typically you have about 90 days to be able to buy really good pricing on these assets after launch. And so be smart about how you're DCAing. If you're really early and you got some of those juicy, juicy bottoms, I don't think we're going to see those lows again. I could be wrong. But Corey and I were able to pick up some of those, and that was a blessing.
Yeah. We could definitely see some lower lows than when we're at today. I believe that, and then we could not. We're a complete discovery zone right now, and it's hard to say. But I'm gonna always keep dry powder on the side, ready to go to make sure that I catch anything. Because we're what, 2 weeks in, almost 2 weeks in. We're like 10 days, something like that.
Mm-hmm.
So we still got like another 80 days that we could see something.
Yeah, absolutely.
If you look at the historical data.
Yep. No idea why the sell-off. Yeah, I mean, if you think about it, especially the bigger sacrificers, they're in profit by a pretty considerable margin today on Pulse Chain, for instance, because they got their bonuses as well. And keep in mind, I think it's funny. Corey and I both, we've talked about this a lot, where people are like, oh, everyone's holding for a 10,000x. Well, look, if you sacrificed a mil or a few mil, you don't need a freaking 10,000x. Like you can get out with a 2x and your bonus, maybe you're 3x up on your initial million or a few million that you sacrificed. And that's what you wanted, and you want to keep it moving. And that's fine for those people. We can redistribute their wealth now and keep it moving over the next couple of years. Let's see. Yeah, you guys, tons of great content. Love to see it. People are helping each other. Okay, here we go. Makers as buyers and sellers on Deck Screener. Thank you for posting that.
That makes sense.
Yeah, and talk to your CPA. Somebody mentioned here. I'm trying to find it. There was a good comment they mentioned. All right, here. Every time you harvest is a tax event, so try to hide it. Yeah, I mean, talk to your CPA, determine how you're going to operate and do that type of stuff. Yeah.
Careful.
Lots of short-term gains to reap and rewards to get. Cool. We've been going for a little bit. Let's go ahead and wrap up the show. Do you have any parting words, Corey, that you want to leave with the audience today?
No, Pulse. Spreckberger, though, answered my question on that exchange, why it dumps. He says, Pulse,
cool.
OKX listing needs a dump to create the demand pay for the market makers. At least it wasn't the OA or OTC like most listings. This was community deposits. Interesting.
Huh. That is interesting. Yeah.
So,
well, cool, guys.
Yep.
Thanks for tuning in. We appreciate you guys being here. Smash the like, subscribe, all that stuff. We're here to pump everybody's bag. We appreciate you guys. And with that, we'll catch you later.
See you guys.